Whenever you're ready.
Okay, hello everyone and welcome to another Zoom analysis. Today Bart will do a detailed analysis of the McDonald's stock. So you can ask questions after the lecture. After that, if there's time, we will do analysis as we normally do. So Bart, you can start.
Okay, sure. So this was similar. This is a similar thing, just like if you remember, we analyzed the Tesla stock a few months ago when I was showing you how to read an income statement, cash flow statement, and statement of balance sheets. So what I suggest, what we should do today is do the same for the McDonald's Corporation. And yeah, initially we also and I showed you McDonald's Corporation. It was 290 something, and told you what they were actually doing, but it was more of a broad sense what I told you for you to understand what is actually happening within the market. So having said that, let's I also sent in the public group 2 links. One of them was Bill Ackman's history, more about him, because he is a hedge fund investor that usually trades or invests similar, does similar analysis, just like we will do today, and decides whether he is gonna enter a certain stock or not. So as you all know, there are several types of hedge funds. There is Renaissance Technologies, who are actually mostly quant traders, in the market and out of the market really quickly, opening 100, 200 trades per day. They actually do the same, just like the trading bot I'm developing. On the other hand, they are hedge funds just like Bridgewater's Associates from Ray Dalio. The way he trades is he likes to look big macroeconomic data, and he opens positions and hold them for a year or two. Okay, then there are hedge funds just like Bill Ackman's, who actually use their capital to buy a significant amount of stocks in a certain corporation to have voting rights, to be able to impact the board of directors. And then they try to change or modify the company's behavior, let's call it, in the market, and then make a profit. So you can see there are a lot of types of hedge funds who actually use different strategies to make money. For example, George Soros and Stanley Druckenmiller actually traded partly and mostly forex market by using the fundamentals, doing actually the same analysis I gave you, for example, for dollar against the Turkish lira, looking for the weakness in the countries and exploiting it, or looking at the weakness within certain currency. For example, British pound. British economy is weak economy, which try high inflation, and then they're looking at and saying, okay, this should go up. So this is how actually different hedge funds work. So today we're going to cover stock, McDonald's Corporation, because I find it very interesting and a good opportunity, really good opportunity in the future, looking at what I will actually do with this corporation after studying its financials and its management. So what I'll start, I will explain to you again what is the income statement, cash flow statement, what's all of that. Just Maras, give me a second. I'll put another link in the chat. I want to open 10K report of McDonald's. 10K report is a report that every company has to give to the SEC, where it shows its profits, annualized, its goals, its plans. They actually show you how they're doing business, what makes most of their revenue, and how they comment it on it. Just a second. Let me try to find it. Here's 2021 year. We can even use 2021. Okay. Now, let's start looking at the McDonald's Corporation. But first of all, if I may, Maras, take remote control. So first of all, let's ask ourselves, what is McDonald's Corporation? Okay, I bet you all know that. What is McDonald's? How do they work? So actually what you know is, you know that they are a corporation that is selling foods, okay? But then you look at it, just similar to Coca-Cola example. Coca-Cola is not just a company that sells beverages. Coca-Cola makes a syrup and then sells that syrup to certain bottlers that move that syrup into a liquid drink, and then they sell it to the third party who sells it to us, to customers. So if you look at McDonald's, you see here about McDonald's, business summary, management view of the business, outlook, blah, blah, all that stuff. And then we can go on at the beginning, and they say, here is the business summary of McDonald's. So you can see McDonald's is actually a franchise business. So 93% of McDonald's, they actually franchise the business to a smaller franchisees. So if, let's say, you want to open McDonald's in United Kingdom, what McDonald's does, McDonald's leases or buys the land and then finds franchisees who open the restaurants on that land, and then they pay. They have to open their business just like McDonald's usually does. So they have rules. You need to have this kind of supplier for this type of food for this. So everywhere McDonald's is pretty much similar or the same. Okay, so then McDonald's actually leases the land and they pay rent on their lease, the franchisees. Let's say you're a franchisee, you pay rent to McDonald's for that spot, okay, where McDonald's leased or bought the land. They or you, that's the difference in agreement, can actually create the building that McDonald's is in, and then what you do as a franchisee, you pay a certain amount of your revenue to McDonald's. Let's say I come into your McDonald's and I buy 10 burgers, okay? And then you sell 10 burgers to me, and then McDonald's takes, let's say, 20 to 30% of the revenue you sold it for. Okay, but McDonald's has, just like every other franchise system, McDonald's has its rules. How the system should work, how your McDonald's, your building should look like. That's why McDonald's is always pretty much similar. Okay, so now that we know that also something written in this report, I don't want to lose time to find it now. 93% of McDonald's buildings, here it is, McDonald's restaurants, the better term is restaurant, yeah, 93 of them is franchised, okay, 36,521, while 7% is actually owned by them, okay? They still own 7% of restaurants. So you know where they make their revenue most of. So McDonald's is really, as you know, a big and strong brand name. So now that we know how McDonald's makes its money, let's move it a little bit further. So as someone who does stock analysis, now that I know what the business is doing, I check out the CEOs. We'll talk about them later. And then we come and see whether we would like to buy McDonald's stock, okay? Would I be an investor in McDonald's? And then when you look whether you would like to be an investor in something, there are 3 financial statements every investor must know. That the same process Warren Buffett does are we doing now, okay? They look at income statement, balance sheet, and cash flow statement. So VIP group, as you already know, income statement tells us how profitable a company is at the end of the certain period, whether it was annual period or whether it was quarterly period. Okay, so we look at McDonald's. Let's say you look at the company. So now you know McDonald's is a strong brand company. They make their money franchising most of the restaurants, and they own 7% of the restaurant. And you see they have 36,000 restaurants around the world. And then you go to the management of the McDonald's and say, yeah, management of McDonald's, I'm thinking about buying your stock. What can you tell me about your company? And then they tell you, yeah, You can check out income statement, balance sheet, and cash flow statements. We gave that is present here on TradingView, but that is also present here. If we were to look at only in year 2021, you would see them present here as well. This is statement. This is really detailed financial statement about the McDonald's. Here they talk about their competitors. They talk about a lot of stuff, human capital management and all that stuff. Okay. Then you tell them, okay, tell me, McDonald's, what is your revenue? Revenue represents, let's say you sold only burgers for sake of easy argument. Revenue represents what's the value of all goods you sold. Okay. So you look at 2016, revenue of all goods, meaning burgers, French fries, sodas, water, everything that McDonald's sold is actually 24.62 billion in 2016. In 2022, it was 23.2 billion, 1/8. Then you look at the trend, okay? Has this revenue increased? 26, 24, 22, 21, 21, 19, 23, 23, it's stagnant. At the best, the revenue is stagnating, but you could actually argue that it is falling down. Now, why could you argue that it is falling down? Because you know macroeconomics, and you know you had inflation for the last year and a half, 2 years. If inflation has increased, that means that the prices of foods in McDonald's have increased. That means that actually total revenue should have actually increased, even if it actually stayed the same, realistically. So there is difference between nominal value and real value. So I would argue that McDonald's actually sold less burgers in the last 2 years than it did this year. Okay. Then you ask McDonald's, okay, your total revenue was last year, it was 23 billion. Let's look at the last year. How much did it cost you to get these burgers? Okay. So how much did you pay your suppliers? How much did you pay for all that burgers, sodas, Coke, Sprite, doesn't matter which one. And then they tell you, yeah, in 2016, we paid them 14.4 billion. This year, we paid them 10 billion. First of all, this is really strange. Now, why would you actually have less cost of goods sold, meaning you would pay less for Coke, for somebody who gets you a meat for burgers, somebody who gets you French fries, doesn't matter. Why would it cost you less within inflationary period? You see, whether you got yourself lower prices you are buying them from, or actually you are selling less. And that's the reason why your actually cost of goods sold fell. So cost of goods sold represents what does it cost you to produce something. When we were talking about Tesla stock, cost of goods sold were actually cost of material and factory you used actually to build a car. Okay, in McDonald's, cost of goods sold represents Coke you get from suppliers, Sprite you get from suppliers, meat that goes into your burgers, okay, bread. This is cost of goods sold. And then you ask them, okay, so your total revenue in 2022 was 23.18 billion. Cost of goods sold, all the costs you had were 10 billion. Remember, this is not all the costs. We still have cost of paychecks to employees. But cost of everything that goes into production of your burgers is 10 billion. And then you get something called gross profit. So your gross profit, McDonald's company was 13 billion. Yeah, that's okay. You're still profitable, right? And then you say to the management, okay, management, so your gross profit actually went from 2 billion to 13 billion. And they say, yeah, you see, we're really profitable. Yeah, you say, yeah, you're profitable, but I know my macroeconomics. You had inflation of 10%, this gross profit should have been bigger. But you say, doesn't matter, let's see what else you got on the table. Then they say, yeah, we have something called operating expenses. Operating expenses now, they represent, for example, a company's cost of marketing and company's cost of employees they have. Okay, so if you work at McDonald's, your wage is their operating expense. And then you say, yeah, what's your operating expense? They say our operating expense is 2.73 billion. You see they are constant within the last few years. You say, yeah, that looks good. Operating expenses are not growing. Gross profit is somewhat growing, so this looks good. And then you get the operating income. And you say, okay, after I have subtracted from total revenue, cost of goods sold, operating expenses, I get an operating income. That means now the company, now remember this, the company has operating income, presents a company that has paid its suppliers of food, in this example, like McDonald's, of beverages, and has paid their electricity bills, for example, and has paid for their employees. And this is the money they have left. And then you say, okay, your operating income is 0.35 billion, you're profitable. You're profitable, I like it. So this looks good. Your operating income is actually increasing. Okay, you see something that is increasing right now. And then they say, yeah, we are profitable. You see how great of a company we are. We are really morally, blah, blah. We are great countries. And then you say, okay, tell me something about your other expenses. Other expenses are, for example, the how to say it in English, just give me a second, the yield or the interest rate. Yeah, the interest expense. The interest rate they pay on their credits. So if they have, let's say, 10 billion credit line within some bank, yearly it costs them 884 million, and this last year 1.3 billion was interest rate expense. And they told you, yeah, after we pay our banks interest rate expense, because we have loans to the bank, we have pre-tax income of 7.83 billion. And this is something you look at the history, you say, okay, but you had 6 billion, 8 billion, 7, 8, 6, 9, 7. You know, dear director of McDonald's, this you are profitable. You are profitable, but I'd like to see actually, what I would like to see is that this graph growing up. This would have to be 6 billion, 7 billion, 9 billion, 10, 12, 13, 13 and a half, 14. Okay, this is how this will look like. But he still says, yeah, but we're really profitable company. We are McDonald's. We're a big company. Blah blah. Look at how great we are. You say, yeah, you're profitable. There are some things I don't like, just like I told you at the inflation at the beginning. You are profitable. You might even be a buy. Let's see then. And then you say, okay, after you pay everything to the United States of America, your taxes, you pay all around the world, actually, your taxes, what have you got left? Okay. And then they tell you, yeah, after we pay all our expenses. Now, remember, let me go back and summarize. All your revenues that customers paid you for everything you are selling is worth 23 billion. You paid your suppliers 10 billion. You had a gross profit of 13 billion. Okay. You paid your employees and your electricity bills 2.73 billion. You were left with 10.35 billion. You gave to the banks this amount of money combined. And then you were left with 7.83 billion of profits. Then you paid the government. And after you paid the government, you were left with 6.18 billions. And then you, as a McDonald's investor who likes to, I don't know, who likes restaurants, you go out and say, okay, let me see that net income. 5, 5, 6, 6, 4, 7, 6.18. Yeah, that's okay. It's somewhat stagnant. It's somewhat in the range. I like to see it getting higher. But you're a profitable company, and CEO smiles and says, yeah, we are McDonald's. We're a really profitable company. Everybody loves us. Then you say, okay, we have a profitable company. In conclusion, we have a profitable company with stagnant or slow raising net income. What would you expect with price of that stock realistically then to be? You would expect this price to be in a range, because this company is not growing. Okay, this company is not growing, so its stock should be like this, range bound. Okay, this is what you expect. You still haven't looked at the price of the stock. EBITDA, EBIT, we can cover it on some other seminar. I'm not going to go too much into details. Then you look at, okay, now you look at what is the average shares outstanding. You want to see, okay, how much does this company have its shares in the stock market. Average basic shares outstanding represents the number of shares the company has on the stock market, like New York Stock Exchange, for example. You look at it at year 2016, they had 854 million stocks outstanding. At year 2022, they had how much? 736 shares outstanding. So then this is the first red flag. Okay, so you have a company with stagnant net income or slowly growing net income year over year, looking at the annual reports, whose actually amount of shares is falling. Now, you ask yourself, okay, so why is the amount of McDonald's shares actually falling? That means usually company uses its own money to buy shares on the stock market. Now, remember this. Let's say McDonald's has a profit of 6 billion, just like it has here, 6.18 billion. Out of 6.18 billion, they use $2 billion to buy back their shares. If you have ever looked at Bloomberg terminal where they discuss share buybacks, usually companies use share buybacks to pump up the stock price. And now, why is this important? Now you see the CEO who is all smiley and telling you how great McDonald's stock is. Let's look at who is the CEO. Just let's look at it. CEO, holders, chief financial officer. I think you can even see it here. It should be written at the beginning. Okay, Kempczynski Christopher Jr. probably. Let's Google him as well. Okay, this guy is general director of McDonald's, and you're talking to him. All he did now was he told you their company is really good and really profitable. You saw, yes, that they are profitable, but they are not really growing strongly. So you would say, yeah, Chris, you are profitable, but your company is not growing. Your total revenue has not significantly increased, even though you had inflation. You are controlling your costs really good, really good. I must say, I must admit that. But your net income is stagnant. So I expect the prices of your company, if I am doing value investing, we're doing the same investing Warren Buffett does now. It's called intrinsic value calculation and value investing. Your net income is stagnant. I would expect your stock to range just like this. If this was resistance, this was support, the stock should go like this because there is no growth in the stock, okay? And then you come to something and say average basic shares outstanding. In 2016, dear Chris, you had 854 million stocks in the stock market. At 2022, you had 736.5 million stocks. Where did the 130 million or 120 million stocks disappear? And then he tells you, yeah, no, we did a share buyback. We wanted to help our stock owners. Now, share buyback is something used that companies, not all, but frequent companies use to pump up their stock price. Okay, why is this? Because then this gives them higher earnings per share. Earnings per share means how much has a stock earned if you were looking at a single share. Now, this is important metric. You know why? Because usually, you know, if you look at the Bloomberg terminal, if you read investing.com, you see that companies, when earnings reports come out, everybody talks about earnings per share. What was the expected earnings per share versus what is the real earnings per share? If expected earnings per share was below the real earnings per share, so the company beat the record, it beat estimated analyst earnings per share, then the company's stock goes up, okay? If it did not beat, company's stock go down. Now, this is really important for our Chris, the CEO of McDonald's. Why? Because this is the way he makes his money. He has his paycheck, I don't know, $5 to $10 million, plus for being a CEO of McDonald's, plus he has shares that if he beats earnings per share, for example, he will get 10,000 shares of McDonald's. And then he can sell whenever he wants these 10,000 shares. And that is another really good stream of revenue for our dear Chris Kempczynski, whatever his surname is. Now that you know that, earnings per share is really important. How do you calculate earnings per share? It is calculated by number of shares outstanding, meaning this number, okay? I think it's even written here. Here it is. Basic earning per share is calculated on the average number of ordinary shares for the last 12 months. Okay? So think about it. If the average number has fallen, let's say the average number was 10, okay? Let's say your earnings were 5 for the sake of the argument. Let's say, I'll make it even more simple. Let's say you had earnings per share, let's say you had earnings of 5, okay? And then you had 10 shares, okay? If you have 5 earnings and shares 10, divide 5 by 10. That's earnings per share. This is how it is calculated. 5 divided by 10 is 0.5. So your earnings per share would be 0.5. Now think about if you have earnings number of 5, and now the company bought back their shares for the last year, and now there are no longer 10 shares, but less shares, not 854, but 736. And now you're not dividing it anymore by 10, but by 5, for example. And now your earnings per share is 1. So 1 is better than 0.5. And this is the trick. So you buy back your shares, so you can manipulate this part. You can manipulate earnings per share. And if your earnings per share are above analysts' expectations, which you manipulate by buying back your shares, what happens? Your stock value goes up. So you have a company that is stagnant at best with its growth, okay? It is profitable, but stagnant, that is buying back their shares to pump up their earnings per share to be above analysts' expectations, so their stock price can go up. They are actively spending money buying back their stock at the market. You can see 854 versus 736. So their EPS, basic earning per share, looks better, but they're also losing money buying back their shares, because this is not any realistic business would usually not do that, especially if you're not growing. If you're not growing, you're not buying back your shares. You can buy back shares if you have stronger business. If your net income has increased from 4 to 15, then you could consider buying back your shares because you have a growing company. This is a stagnant company that is buying back their shares. And then let's see how much money did they spend buying back their shares. Then we go to something called cash flow statement. Now, cash flow statements actually tells you what the company is doing with their money, okay? What is they doing with their money that they have? So there are cash flow from operating activities, cash flow from investing activities, and cash flow from financing activities. Cash flow from operating activities represents how much money did you make from selling your goods, just like this one, this is very similar to total revenue, okay? But it is not the same. I will not go into details. It is not the same because, but I will tell you short like this. I told you last time. If, for example, Sonia and I have some kind of a business, and I sell Sonia five burgers. Each is priced $10. Sonia pays me the same day. Then my cash flow from my operating activities is equal to 5 times 10 equals $50. Okay. But if Sonia pays me let's say in 2 years, but I'm looking only at the accounting period of 1 year. Let's say this happened. I sold Sonia burgers in 2020, at January 2020, and Sonia paid me at January 2022. From the year 2020 to year 2021, this period, my cash flow from operating activities is 0, because Sonia actually hasn't paid me, okay? But my total revenue will be 50, because the business between me and Sonia happened, and this goes into total revenue, whether I received money or not. In cash flow statement, only activities for which I received money directly is counted. This is why investors and value investors, especially Buffett, looks cash flow from operating activities much more diligently than they look at total revenue, because this is actually the amount of money you have received on your bank account by doing your business. All else will and should be paid to you, but in some other time. Okay, so cash flow from operating activities, how much money you got from your people you sold burgers to that year. So you see it was growing, then it started falling again. 6, 7, you had a period of inflation. I repeat, period of inflation, you have similar results. So this is stagnant growth at best. Maybe some kind of, if this continues to grow higher, then we could say this has some potential to go higher, but for now this doesn't look good. So this is cash flow from operating activities. Cash flow from investing is from the money I have received from selling my burgers and getting money out of it. Okay, how much am I spending to build my business better, higher? Am I opening new restaurants within America, South Africa, Europe, wherever I'm spending my money? So actually, you want cash flow from investing activities to be negative. That means you are spending money to grow. If you are selling your restaurants, cash flow from investing activities will be positive. But that means that your business is growing, not growing, it's falling. While your cash flow from investing activities, if being negative, it is actually good stuff. So you can see in the history, it is okay. Cash flow from investing activities, you can see the trend. It's mostly negative. It looks fine. Now, the thing I'm really concerned about McDonald's is the following. Cash flow from financing activities. Cash flow from financing activities tells you how much money did McDonald's spend on financing its activities. So, meaning you have here certain subsections. So how much money, let's say McDonald's stock is a stock that pays dividends. So we know, first thing, we know that in the year 2022, McDonald's got 7.39 billion in cash. Okay, out of this 7.39 billion, they spent 2.68 billion to invest. For example, let's say to open new restaurants within United States or Canada, Brazil, doesn't matter. They paid $6.58 billion to some financing activities. Now let's look at which financing activities are they. Now, number one, okay, so they spend, now this is really interesting. So out of this 658 billions, they gave $4.17 billion to the stockholders to pay dividends. So if you had or you have McDonald's stock to pay you the dividend, and all you owners of stocks dividends, they spent $4.17 billion. And then you look at the Chris and you say, yeah, Chris, you see, you had stagnant cash flow from operating activities. You invested the same as the previous years. This looks okay. Now you see, from 6.58 billion, you just gave 4.17 billion to stock owners and dividends. It does not look that good for me. Okay, it is still less than 7.39 billion you got. And then you see, but you see, Chris, what you did is you actually bought back the shares. You remember when I was talking about this, average basic shares outstanding. How much did Chris spend to buy back their shares? He bought from 746 to 736. That's 10,000 stocks, I believe. He bought back these shares. How much did it cost him? Then you look at the cash flow statement. Our dear Chris spent in year 2022 alone 3.65 billion US dollars to buy their shares on the market. He did the same thing you did when you buy McDonald's stock, but he didn't spend $500. He did it by spending 3.65 billion. And then you say, okay, this Chris really looks like a fraud. Now, why does he look like a fraud? First of all, he has a McDonald's. He's a CEO of McDonald's company. He can tell me whatever he wants. He's a CEO of McDonald's company with income statement, with total revenue that is stagnating, with net income that is stagnating and not significantly growing higher. Basic earnings per share has gotten from 5 to 10 to 9, 8. I mean, totally unrealistic compared to the net income or the total revenue. This should have stayed the same. But this hasn't stayed the same because Chris has bought back his shares. And Chris, to buy back his shares, he spent, the last year, he spent around $3.65 billion. So what Chris is doing, he is spending significant amount of money to buy back his shares. And why is that significant? Because dear Chris has got a revenue of $7.39 billion. He spent $4.17 billion to buy to give you the dividends, and then he used $3.65 billion to buy back the shares. Now, in conclusion, Chris is an idiot. Chris is using McDonald's money to buy back the shares, even though his company is not growing really good. And now, why is Chris doing that? Chris is doing that because he is not satisfied with his $10 million paycheck, but he wants to manipulate his earnings per share. So what Chris can actually do, Chris can beat the analysts' estimates, so Chris can get even more money by getting stocks. And then you look at, okay, we have a CEO that only looks on himself and his money, his salary, and how much compensation he will get from his stocks. So what we expect now with McDonald's stock to happen, McDonald's stock should go like this, higher, higher, higher for the last few years, because dear Chris has just been buying back the shares. And then now that we have said everything, balance sheet, I will not go into that in details. Balance sheets, total assets and total liabilities represent everything that the company owes. Total current assets represents everything the company owes that can be transformed into money within 1 year, and non-current assets total after 1 year. Total liabilities, current assets, current liabilities represent the debt that is due in 1 year versus non-current liabilities that come later. Okay, so we can even digest it into details. I want to just see something. Short-term debt is 705 million. Let's see, total current assets. Yeah, it's okay. So this company is not going to go bankrupt. But so now that we know that dear Chris is manipulating the stock price on the stock market to get his money, to beat the earnings of analyst estimates, now probably Chris has gotten, because he has beaten EPS, Chris has gotten compensation in stocks. Okay, and then you look at, let's see how big McDonald's actually, what is McDonald's stock, and then you look at the weekly chart, because this should be looked at weekly, not at 1 hour, or daily is also another way of looking at it. So McDonald's stock is a stock that has significantly gone higher. Look at this. So let's look at here. That has gone up 70 to 100%, while their revenues, net income, and all else is stagnating. Now, this has gone up only because McDonald's has actually bought back their shares on the market, not because they're a good company. This is artificially pumped up. All this pumping up is done by McDonald's CEO and CFO and their management. And now you look at why are they doing this? Of course, because everybody has financial interest and they want financial interest. And I bet you so now think about it. Now they come to the news media. Dear Chris comes out and says, yeah, I love my McDonald's stock, meaning I love my money. I don't care about my employees. All I want is money. That's why I love financial analysis and macroeconomics, because I can see a liar and a fraud when I analyze this stuff. And then Chris says, you look at our stock. Our stock has really gotten up. You should buy it. It has a bright future. It's going to 5,000, right? And all the naive people look at the chart, especially only the ones that look only technical analysis. They look at the uptrend. They see, oh my God, this is an uptrend. Look at the trend line. Look at this trend line. This is even a channel. When this channel touches the lower, the lower trend line, it's gonna shoot up to 400, right? But we know that little Chris is really a good fraud. So then we look at what are the insiders doing. Now that we have discussed financial statements, we want to see what are the insiders doing. Insiders are employees within companies. So what are they doing? Maybe this insider information, maybe they're really pumped up as well, just like Chris is. Maybe they're really pumped up as well, and they are also buying the stock, right? Because McDonald's is a great company. Let's look at what they are doing. Gross Marion, officer, sold. Gross Marion converted his profits. Erlingon, sale, sold. Let me see something. How much money this is? Okay, shared. Now, Erlingen, sale, sold. Really good company, huh? Steyer, sold. Samples, sold. What did our dear CEO do? Oh, here he is. Kempczynski, sold. How much stocks did he sell? For almost 4,000 stocks he sold. When was this? February 23, 2023. Our dear Chris sold stocks of McDonald's while he's telling you how great McDonald's company is. So let's see, February 2023. February 2023, around 265. He sold near the top. You see? Where our dear Chris sold his stocks. Let's go further. Here he is again. This is compensation they have because they manipulated earnings per share. Sold. Everybody at McDonald's stock is selling. But everybody is talking to, especially the YouTubers, how great this company is. Well, McDonald's employees or management is actually selling McDonald's stock because they know what they're doing. They're artificially pumping up their stocks, and they're selling their shares on higher price to you naive investors. And now think about it. Now that we know actually that everything Chris told us at the beginning, that when he represented his company, is a lie, white lie, I don't know how to call it, because it's not something you go to prison for. This is not an outright fraud. This is just a manipulation of capitalism. Now that we know what he has done, we can tell to the Chris that he's a little manipulator who only cares about how much money will he get. If you sold 4,000 shares at, let's say, 300, let's say 300 for the sake of the easy, 4,000 shares times 300 is how much? I don't know, 1.5 million, whatever the price is. That's how much. And what is Chris' salary? Let's look at what is Chris Kempczynski salary. Of his total 4 million, 5 million were received in stock options. Now think about it. Okay, now we have what is his salary. So our dear Chris is a millionaire who is manipulating McDonald's stock price, so he's using McDonald's money to buy back the shares of the market, so he can sell his shares at even higher price. Now this is Chris Kempczynski. And this is what you get when you understand financial analysis. Now that's this guy. And now think about it. Does our dear Chris, who is probably on Bloomberg talking about how smart he is, does he care? Would he be rather the guy who cares about the employees of McDonald's? Or is he a guy who actually, only cares about his money? You see what I'm talking about? Now that we know Chris is a millionaire who is manipulating price of McDonald's stock, not only him, the whole management, he's not the only one at fault, CFO, CEO, and we know that he only thing he cares about is more millions. Does Chris care about his employees? Probably not. Okay, Chris doesn't give a fuck about his employees. Now, could you, Maras, check out what is the average salary in McDonald's? $9.25 per hour. Yeah, now think about how less salary in Brazil, in South Africa, in Africa, in I don't know, in Asia, how salary is smaller in these countries. Now let's say $20,000-$30,000 in the United States. It says here down the average McDonald's salary ranges from approximately $29,331 for a cashier and crew member to $500, let's say, to CEO. Okay, let's call it $30,000. So dear Chris is, just a second, my laptop battery is low. So what dear Chris is doing, dear Chris is making millions while his employees probably, when you combine it, can't pay the rent or have problems paying rent by in McDonald's. And now we know that. Now what's the plan of the action? Now how are we going to take advantage of it? Now let's continue our story. Now there is some hedge fund. This hedge fund has 30-40 employees. Somebody is covering the stocks like restaurant stocks, like McDonald's stocks. Somebody is covering macroeconomics, etc. And then somebody else has certainly seen what I have seen. The dear Chris is not a good guy and only looks upon himself, and then he is using money to buy back the shares even though his company is not growing as much as it should. Now, what is the plan of the action? The plan of the action is you should short McDonald's stock. Actually, how can we make money out of this stock? By shorting it, of course. Now, it's not enough to say, yeah, I'm just gonna short it. When we did the analysis a few weeks or months ago, I think we had the top, right, Maras? We were actually at the top.
Yeah.
Of the, yeah, we were at the top end, but for me, this is not enough to short. So this is the plan of the action. I will write it on the chart.
Yeah, maybe price already created.
Yeah, maybe it is already created at the top, then it will fall. Yeah. Can you open the text just? So yeah, now you go to, let's say you work in a hedge fund, and now you go to your boss, you have conclusion like this. Is manipulated. And you conclude it after all that I have told you. He's buying back the shares with money he actually doesn't have. So let's look at it further. Now, what's the plan of the CEO? It's not enough just to sell it, because you're against McDonald's company, which just spent $4 billion buying back their shares. They have money to spend, okay? They can get credit lines within banks, so it's not just enough to share their for them to sell the shares. Now, question number one. Here is the plan. Let's call this plan of the action. War plan. War plan. Okay, sounds better. Number one, what would you think about it? To short McDonald's stock. What would you happen? What would you like to happen to McDonald's? And what would you like to happen within the world, within the environment of McDonald's? S&P 500 should go down. Okay. Recession. Some kind of recession should happen. Number two, which industry is McDonald's in? Okay. Now, which industry is McDonald's in? It's something called consumer discretionary. This is a part of the S&P. Now, number three, you would like the whole sector, okay? So not only McDonald's, all the other companies, you would like them to fall down because they will just pull down the McDonald's with themselves. Number four, you would like to, let's call the management of the company has to stop buying back the shares. You know why? Because then they are no longer your they're no longer playing against you. What you see now is that they are buying back the shares, but they are also using this money they are buying so they can still sell their own stocks at higher value, so they make money. Who gives a fuck about the employees of McDonald's who has $3,000 paycheck or $2,000 has to pay his rent? Who cares about them, right? He needs to make his millions. So this is a plan of action. Management of the company has to stop buying back the shares. And number five, financial statements has to be stagnant or deteriorate. Okay, then you have company with stagnant financials or deterioration within whole sector which is going down, and this is a good opportunity. Now, technical analysis. Now that this is real analysis, this is real investment analysis, this is real trading. Now that you have set up all that needs to happen, we can't guarantee that will happen. McDonald's could increase their revenue. If we see world developing and growing further, you could see McDonald's going ahead again. Nobody can predict the future, but this doesn't look good for them. Then you do your technical analysis. Okay, then technicals come into play, you see. And this is what actually I drew. I would also draw support sorry, Maras, I would also draw some kind of a support over here. Let's call it like this. Some kind of support. Let's, for the sake of the easy argument, let's call it here. I would also add another indicator. A simple moving average. Just a second. I would also look at the weekly chart. Yeah, this looks really good. And I would look at the 30-period moving average. So 30-period is this one, right? I will just, Maras, I will hide this.
Let me do it.
Okay, you can do it. Yeah, sure. So this is 30 period. So this is still in an uptrend technically. This is still in an uptrend. This is support. This is, you see how this is going to become strong support. But also they would, could you, Maras, open volume indicator as well? So now think about this. When we look at stock, when we analyze stocks, we like to see volume as well. So what I would like to see when I am entering my shorts is, first of all this has to happen. Okay. Then on technical side of the things, I would like to see the following. Strong sell below 30 period moving averages. There is also one other indicator I use. I will not talk about it today. With high-low volume. Why? Because that tells me nobody is no longer buying the stocks. Now everybody is selling the stock. And our dear Chris and his other CFO, CEOs, officers are selling stocks to naive investors who are only looking at technicals and buying a company with stagnant revenues and net income, which has gone 50-70% within a year or two higher. So you see how actually McDonald's stock is nothing currently but a stagnant company, not progressing, which management is using the current market price. They have artificially created themselves to sell their shares at high price to make even more millions, not caring at all about the employees of a company or about anybody else. So this is capitalism, guys. This is capitalism. Are there any questions regarding McDonald's?
I have a few. So
Sure.
I was okay, so I was wondering when you were showing holders and there is this direct, it says direct, like they're not selling or buying. I don't know what that is.
I told you this is what they get they get awarded the stocks.
Okay, so when it says only direct, this means they got it, but it says sale, that means that they already
Not
sold it.
direct. Sorry, I don't know direct what direct means, but this conversion and sale. So this means because there are certain types of shares. There are preferred shares, and there are some shares with some kind of options. I'm not that expert to tell you into details what are the specific intricate difference because it doesn't affect my trading. But so when you're a CEO or an officer on a high employee management, some kind of stock compensation, and then you sell it at certain price, right? And then you can get awarded these stocks, and then you can sell them at the stock market. Okay. So this type direct, indirect, I'm not sure what does it directly mean. Probably
awarded.
Okay, second question.
Did we lose Bart?
Yeah, actually we did.
Okay, I guess his battery ran down. Yeah, my second question was regarding number 2 and like number 4, when we will know when the management stops buying back the shares, and number 2, which is this consumer discretion thing.
Yeah, he's here again.
Okay.
Bart, can you hear us?
Yeah, I connected the wrong in my battery was low on the laptop. Now I'm on my mobile phone. Now it's charging. I connected the wrong charger.
Okay.
So Bart,
what I was
yeah. No, go ahead, please.
So what I was talking about, this is the same conversion. There are some options. For example, if I'm CEO of some company and I get compensated, there are some arrangements that I can't sell the stock in the next year and a half or two. Okay, so I can't tell you into details because I don't have the information about Chris, but you can see he's selling his stocks at an all-time high actually.
Okay, my other question was about when we will know, like how, sorry, the question was how we will know when the management stopped buying back their shares. And also this number 2, the second thing, which industry is McDonald's in consumer discretion, if you can just tell more about it.
Just give me a second so I can join the Zoom meeting so I can take over the remote control. So Mara, now I will join from the laptop.
Okay.
Okay. How we will know that? Can you, Maras, again open the financial part of the stock? No, not here on the yeah, it's here, it's easier. Now scroll down. You will see it on two parts. First of all, you will see it on average basic shares outstanding down there. Yeah, let me request. You will see them stagnate or stop going up. Okay, this will not anymore fall down. Okay, on the other hand, when you look at the cash flow statement, cash flow from operating activities, cash flow from operating activity, this is, oh, sorry, this is quarterly, this was annual. Okay, cash flow from operating activities, this will actually decrease. Okay, this cash flow from financing activities will decrease as well. Okay, you will see falling in this part of the section of the cash flow of financial activities. So we have two stuff. The best to look at is actually how much their shares are outstanding. This is the best part, because you see that their shares are falling. They should either start going up, okay, or they will stagnate. And then when this happens, you will see that their cash flow from financing activities have gotten better. Because why? If you have 100 shares, if you want to collect more money, then what you will do, you will increase the number of shares and you will get paid for these shares. And that is usually financial activity. It is counted within cash flow from financing activities, and this will become less negative. So this is how you will know.
But they show this report only once a year, right? So
no, there are also quarterly reports. I didn't go into I did not go into quarterly reports. When you look usually, let's look at the quarterly. When you look at the quarterly, you usually should compare Q2 2023 with Q2 2022. Okay, Q2 2022. You see that this has grown. Okay, Q1 2023 with Q1 2022. 5.6, 5.9. So somehow they have now increased the revenue. So what Chris is actually doing, he's getting his money, but he knows what he has done. He knows how vulnerable his McDonald's stock is, because what he or previous and current management has done to the company. So he is trying to increase the revenue now by still having his high compensation. So we'll see what will happen within the future. I would not short the stock now. For somebody who is thinking about shorting, I think if the stock goes back to its old high, Maras did technical analysis of the resistance, a short is a realistic opportunity. But just be aware that my conditions for shorting the stocks haven't met yet. But I mean, it's a good trade. You can't say it's a bad trade because you have done, or I have done the analysis, and you see the truth behind the movement of the stock.
Yeah, I mean, you'll never be able to catch the top. So
yeah, I remember. We actually, but it was more luck that we caught the top from our last analysis, right?
Yeah. I mean, this looks like a pretty good sell opportunity from technical perspective. If you added to that fundamental analysis, then I mean, especially if price managed to go below 280, something like that, then we could see a more bearish pressure on this pair. But again, if S&P going higher, probably we'll see spike up on McDonald's as well. So yeah, so far we can see the price in some kind of range. So I would like to see continuation in this range, the price staying a little longer, and then once when we see breakout of the support, we can say the price will continue going down. Okay, sir, I have a question. Okay, Salman, you can ask.
Sonia, here's a link in the chat so you can read more about consumer discretionary stocks. Because you usually correlate them with the S&P market movement. They are cyclical and counter-cyclical stocks. So read about it more, and you will increase the level of knowledge.
Thanks.
Okay.
Any other questions?
Do you have any other question? Yeah.
Yeah, I have a question for Bart.
Yes.
Can you guys hear me?
Yes. Yes. Yes.
Yes, yes, we're here.
Would you open up the cash flow statement again? So, the cash from financing activities, so they spent 3.65 billion buying back their stock, it looks like you said,
Yes.
for is there like an acceptable amount in most companies to sell like a certain amount of stock? Say if a company is expanding and doing really good, do you aim for them to not sell any of their stock, or is there like a healthy amount?
Well, probably I can't tell you the exact answer if you're looking, for example, for some statistical number, but probably the literature, financial literature, probably says that some percentage. Maras, could you also open parallel to McDonald's Corporation on other tab? Let's say Apple. Okay, I know Apple is buying back their shares, so we can compare them. On TradingView as well. So to buy back your shares, this is actually you reward your current investors, right? Because you push the price higher. So if you had owned McDonald's at $100, you would be happy because they're buying back their shares. But you would be happy only if they're making a lot of money so they can afford to buy back their shares. If I could somehow compare to us normal people, think about buying back your shares as spending your money going to the, I don't know, to the nightclub. You see, you feel good. This is initially good at the beginning, but if you do it too much, if you spend too much money, you actually end up, I don't know, drunk and sick if you do too much. So you only buy back your shares when you can afford it, okay? And you can afford it when your revenue and net incomes are really high and are really growing. So let's look at, for example, Apple stock. So Apple stock, look at this. 65 billion in 2016, 122 billion in 2022. This is why Apple is Apple. This is why America is America. Let's look at McDonald's. 6 billion in 2016, 7 billion in 2022. Even though inflation for food, as you all know, as I know, as everybody here listening knows, has gone up significantly, way higher than 50, 100%. I know I buy some protein drinks, they cost me €1, now they cost me €2. Now my inflation for me was 100%, not 10% like CPI is of the United States. Or in Croatia, inflation is 7%. So when you look at this, now you can say, well, Apple can afford to buy back its shares, right? They invested 22 billion, cash flow from financing 110 billion. And out of this 110 billion, they spend 89 billion to buy back their shares. They can afford it. You see the difference. You see how their operating activities has increased. Let's look at their income statement. Total revenue, 214,394. You see the difference. Net profit, let's look at their net income. 45.99. This is what I would like to see with McDonald's if I were to say, yeah, they're okay with buying back their shares. Now, Apple stock growth is fundamentally sound growth, as Warren Buffett would say. It has intrinsic strong valuation. McDonald's stock is Chris and his management pumping up the stock because he can take the compensation, and actually he does not give a fuck what will happen about the employees, because if this continues, if this increases and this starts to decrease because of the concurrence or possible recession, he will initially have to buy back the stock. So this will fall, this will have to go up. Okay, issuance or retirement of that, think about that's like you're issuing bonds or going for a credit in the bank. That's called cash from, because if I have borrowed $5 billion, this is positive because this has increased the amount of cash within my company, even though I will have to repay it back later. So if this continues, Chris will sell all his stocks, probably talk around the Bloomberg and all the channels how good he actually is. I bet you Chris is probably somewhere, let's look, a big philanthropist, right? I'm just interested. Let's see it. Chris Kempinski. That's right, like philanthropy. Keeping McDonald's relevant, blah, blah. Yeah, I can't find anything. But trust me, this is not the guy who is going to the church every Sunday. This is probably the guy who is on a yacht every third, fourth week with underaged.
Yeah, probably people who go to church every Sunday, you could expect something like that from them.
Yeah, well, it's also a possibility. Yeah, probably, you know, the surface behavior. But I bet you he's probably somehow probably a philanthropist and all that shit. But you see, when you understand the fundamentals, when you see the truth behind everything that is happening, right? Also, I can also give you one other seminar about China and how China, BRICS, and Russia are trying to take over the United States by economically manipulating the prices of oil. This could also be a long seminar, but this is really interesting. I mean, if they manage, they really did a masterpiece. So, but I will offer it as a theme for one of our next seminars, so you can vote. When we will cover all the macroeconomics I was telling you, that I'm telling you also live on YouTube, we'll go even more into details, showing you how actually you can attack the US economy without anybody knowing you're attacking them, especially the regular citizens. But you can see now, you can see now, Jake, how actually what I would like to see with Apple versus what I am seeing with McDonald's, that I would say, okay, share buybacks, you can do it to help the investors. But this is not McDonald's. This is not helping the investors. He's only helping himself.
Okay, yeah, I had another question too about I was wondering what website you go to find all the stockholders and like see if they sold their stocks and all that.
Here, Yahoo Finance. Go to Yahoo Finance, then go to holders, and then you go to insider transactions. Okay, major holders. You can see who is the major holder of the company. Institutions 70%, insider roster. On shares owned on transaction date by CFO, officer. Where is the CEO? I can't find him now. You see, and then you go to insider transactions and see, are the insiders buying or selling? And you sell. You see, this is how you look at it. Yahoo Finance. Okay, this is where you can check it out.
Okay, sounds good. Yeah, I didn't know before that was all accessible information. It's actually pretty cool. I can look at that.
Yes, this gives you a certain view of what the management of the company is doing. I think Boeing actually, I am an owner of Boeing stock. It has really bad financials, but I think their CEO actually bought the stocks a few months ago, if I am correct. I don't remember, but we'll see.
Yeah, we have a question. Marco wants to know how to open financial statement on TradingView. Just go on one stock, you have Apple here. Now they have 3 dots. Click on 3 dots and go down. Financials, and that's it. You have everything here.
One more thing, Maras, could I just show you?
Yeah, we
something?
have also just question from someone.
Okay, sure.
Okay, people like me who have a small amount of money to trade and want to invest small money every month, like $20 per month. So what is the best options and of now from your side?
Just let me read the question again. I'm not sure if I understood it correctly.
Yeah, if you have a $20 every month, how would you invest that?
How would I invest that?
Yeah,
Oh, I mean, you can buy stocks of companies that have really low value, like 3M. I think they're one kind of company. But if you have $20, which country are you from?
Salman is from
So
India.
I'm from India. I'm from India.
So Salman, on your first of all, if I was from India, just let me open this. If I have $20 per month just to invest, I would buy, especially since you don't know financials as well as I do. So I think I suggested buying JP Morgan a few months ago. I think it was March. We can check how the stock is actually doing. But I would buy, if you just want to be an investor, buy index funds, because doing the things I do goes with preposition that you can read financial statements just like I do. So if you want to invest, the best thing for you to invest currently is doing passive investing, meaning buying shares in index funds like S&P 500, all the big major indices, because in the long run you will make money. Buying stocks with 20 shares, I don't think it's a good idea, because you don't have a lot of stocks to offer.
No,
Okay.
I'm planning to as like my salary is now about $250 per month. Okay.
Okay.
And I'm trying to save some money for trading. For making big capital, I want to invest small amount of money. After a year or two, I'll use that money for my trading purpose. So that's why I want some stock or some ideas from your side that I can invest my small amount that can grow. That's not possible that everything which you will say, as we all know that everything is predictable, but 90% we can try at least for going at right path.
If I have understood you correctly, the best thing for you this is where okay, first I'll answer your question. The best thing for you to do would be now save your money, okay? Try to develop another stream of income, like, I don't know what your passion about other than trading, okay? Try to increase the amount of income you have, and then use every month as a part of your part of your income month to buy index funds. This is number one. Go into some investment that you don't think about it. You just part of your money every month goes into some passive index fund like S&P 500. And you forget about it for the next 30 years. Okay, that's the thing. After 30 years, you'll have a lot of money. You will be able to live from the dividends on that money. The other one is this is what I talked about with Jack Schwager the most. Mine and his advice for most people who don't want to be top traders or professional traders is to go passive into index funds. For somebody who is passionate about it, who wants to learn, then you go into trading, but then you find a mentor, you or somebody who's really good. You are here, and we are the best. If I can be sincere, we are by far the best. And then you learn here, and you take this amount of money, and then you take it for trading, and then you try to increase. Then you can make several hundred months. I don't know, Oliver Kell, actually, I think Schwager told me, was it Oliver Kell? He's a famous trader. He made 900%, I believe, in 4 months. But this comes with this amount of knowledge, right? This comes with understanding the volumes, whether you're trading stocks, options, futures. Then you go into details. Okay, maybe if I have this small amount, I can save up, and then I can sell put options on companies I like, or I can sell covered call options. So this is also one good thing I give to traders, or I suggest for someone who is risk averse. I like to trade futures contracts. Futures contracts is sometimes $2,000 per position. Right? When you sell certain call or put options on companies you love, I won't go into details, but this is also like a small monthly or even weekly growing up of your capital. But it all depends, and for you to do it, you need to understand how to trade for everything. I saw your trading results for the last few months since I gave you the technical strategy. It looks really
Yes, sir.
good. So
I used to
I see
trade that also now so it's around I have traded about 89 trade I have taken till now. Around
Mhm.
56 trade are positive and so around 5 to 7 are on break even. Around 75% it's I like that trade idea actually.
great.
I used to trade
So
on that only.
great. Yeah, you should focus. If it works for you, the strategy I gave you, then focus it only on that. And if
Yeah,
it makes you money, great. And I love it. I mean, I like the feeling of actually making you a profitable trader. But yeah, that's exactly what you do. Now you have that. You can also start learning when I give this some kind of seminars. After this, you go and look what is income statement, what are the parts of the balance sheet. You can always ask questions. Also, one thing I wanted to mention, if you look at the history of our VIP group, I remember I gave a bribe stock preposition on JP Morgan at 135, something like that, on 130. And look at it, look what happened. Exactly everything as predicted. JP Morgan has strong fundamentals. I looked at their financial statements. I knew, you remember our analysis, I knew that First Republic Bank crisis was not a real crisis. The real economic bank crisis is not the way it happened with First Republic Bank. First Republic Bank made wrong business decision that cost them a lot of money, and market participants, who are not all of them, but a lot of them are ignorant, thought we have another bank crisis, which was completely wrong. And look at what happened to JP Morgan. You see, this is understanding fundamentals and positioning yourselves within the market. Maybe, Maras, you can even upload some of these seminars on the YouTube so people can see our predictions.
Yeah, I will, but not a lot of people like to watch a video who is over 1 hour, you know.
Yeah. Any other questions? Bart, you talked
no,
about
sir, I'm done
options.
from
Bart, you talked about options selling. Will you do a session in the future? Well, sure. We have a lot of teams, our members like us to talk about, and if options win on a theme, then definitely we can cover options trading.
Yeah, for sure, for sure. Okay. Do you have any other question?
Should we do macroeconomic analysis? If not,
Yeah, I think maybe we could do that next time. It's 1.5 hour, so a lot of information for now.
yeah, of course. Then okay, I'll just give you a short summary of macroeconomic fundamentals. So Maras, I will just do it in 5 minutes, so everybody can know what is happening. So gold, everything, and we talked about our analysis stay the same. To understand gold, we need to understand macroeconomic policies of the United States. We saw inflation data and PPI. CPI, you remember what I gave you in the VIP group, that I'm entering short, the 1927 was my short. It is around 400. Now think about it. 1927 short is now 400 pips in profits. 1955-60 is now 500, 600 in profits. 1980 shorts is around 700 pips in profits. It all came from fundamentals and then combining it with technicals. I was entering shorts as we had this upward swing movement, if you remember. And it applies the same. Now we might see some kind of a strong support on 1900s, which would give us some kind of retracement. Nobody can tell you what kind of a retracement will happen or whether it's gonna just break down. What we had was CPI that remained sticky and core CPI that remained sticky. So that means in the United States, prices are still rising. Okay, this is number one conclusion. Could I, Maras, just write it down quickly after you have done your technical analysis?
I had a quick question for you, Bert.
Sure.
When you say CPI is sticky, I was reading something. Is that called, I think it's something called nominal rigidity or something?
I don't know. I haven't heard about this.
Where it's not really there's kind of like a lag in the prices where it doesn't really reflect in the CPI right away.
Uh,
I
I
just
don't
I
know.
just
I
wanna know
haven't
what you
heard
know.
about this term. Honestly, I haven't heard about this term. There is a lag. If we are talking about monetary policy, there is a lag of its effect on CPI prices. Maybe that was something they talked about. I suppose it was the reason.
Okay, yeah. Yeah, I was just wondering what you meant by CPI is sticky.
Yeah, so CPI is sticky because, okay, I'll write it, because core CPI is the same, meaning high, growing, meaning positive. It's 0.2%, right? Now think about, always think, if you were a central banker, if you are a central banker and core CPI is still 0.2%, would you reduce your interest rate? I wouldn't. I would definitely remain hawkish. Even I would increase my interest rate one more time, and then I would remain hawkish for the period of time because I want to see disinflation, okay? Because I don't want inflation expectations to go into economy pushing the prices higher. So this is CPI. PPI came pro-inflationary, okay? As it came pro-inflationary, it means they are pushing the prices higher. So that tells me also Fed will remain hawkish, and so gold will fall, okay? I don't know what news we have next week, but this we are what we are doing, we are continuing the fundamental trades of looking for shorts on gold. My day trading, did I give you analysis? Intraday trading, that is actually, I'm reading the market sentiment. It is hard to do. It's not easy to do. And sometimes I might miss because some news might be against the trend, but I may expect it to push down the trend. But in the macroeconomic theme of things, if you're looking at daily, weekly charts, for now, look for shorts. You remember last time we gave you analysis, I showed you Fred of the interest rates where we might see a recession, but we can't say up until now that US is gonna enter recession for certain. We can't say it, but we are following it. When recession happens, gold will go up. Okay, how far nobody can tell you. But for now, we are selling shorts and taking our profits on selling shorts on gold. Any questions regarding gold or US economy, inflation, PPI, job data? Okay, then Maras, should we go to GJ?
Yeah, let's go to GG.
Just let me give up remote control. Okay. You can do your technical analysis. I will talk about the fundamentals. GJ remains the same. I didn't buy this swing low that we had opportunity to buy because I wanted to see further retracement. And unfortunately, I missed my entry. So GJ is, well, technically it's hard to tell, right? Fundamentally, we know GJ is gonna go up. Now, technically, you're buying it almost on a high of the last few years. Now, where I would be a buyer, probably I told you on the support of this range. But if this price breaks up, then what Maras drew could be a good buying opportunity. I would be buying here, exactly. This is where I would be buying. But at the looks of it, it doesn't look, the price will retrace up to that moment. Up to that 180 price point. So if price breaks above this range and then retraces, I will also consider entering a swing long, macroeconomic long on GJ. You remember, guys, British economy is still fighting inflation. Bailey is pretty incompetent. Bank of Japan has somewhat increase their yield curve control, meaning now the interest rates can go up to 0.6, 0.7% on 10-year government bond, and then they will react. So this is giving strength to the Japanese yen. So there is a possibility in the future that this will no longer constitute a trend. There is somewhat, let's say, a small warning, but this is fundamentally still bullish because we have different monetary policies between two countries. So I will be continuing to looking for longs on GJ, okay? And GBP US dollar and Euro US dollar as well. Maybe you could Maras draw Fibonacci and also check it out. Bart, what are your
Yeah.
expectations on 50 basis points instead of 25? If you're talking about the Federal Reserve, I don't expect 50 basis points. I expect 25 basis points. But this is a good question because if one of my next seminars, if people from the VIP group voted like that, is that oil prices will tell us all, because oil prices are dormant attack on the United States and on the European Union economy that could actually push CPI and core CPI higher and give you new inflationary wave. Again, giving another supply side shock, but this is really strong, a long seminar that I would have to talk 2 hours about to give you more details into it. I would like to see another intervention, the Japanese yen then continued the buys on GJ. Well, we'll see. They haven't done intervention by buying Japanese yen in the market. What they actually did was they increased the yield curve. And think about it this way: they are slowly putting a top on GJ, on USD JPY by giving strength to the Japanese yen. Any questions?
Okay, guess not. Yeah, I just want to mention, sir, and the phrase our Bart, recently a well-known Croatian economist, said that Bart is the best macroeconomist in the country. And yeah, in my opinion, I think he's the one of the best in the world. So, Bart, yeah, I just want to say congratulations.
Well, thank you. You didn't have to say it, but
I mean, it is what it is. I have to say it. I have to say it.
yeah,
It's my
okay.
duty.
Thank you for the kind words.
No problem. So, do you have, guys, maybe any other question? If not, yeah, we will end the stream, and the next Zoom meeting will be probably Tuesday, maybe Wednesday. So thank you for being here. See you tomorrow at London session, and take care. Thank you, guys, and bye-bye.
Thank you.
Take care.